Greetings, millionaires and multimillionaires. I'm Lane Bean, and I'm coming to you today from the mission center of my house as I'm in lockdown of the COVID-19 epidemic. But we're also using this time frame today to continue our video expert interviews and help add value to you so that you can become a wiser investor and a better millionaire. Today's topic has got a direct application to investors and to businessmen and certainly small business owners. I've got two experts, a lawyer and a CPA, and I'm going to introduce them in just one second. And we're going to spend some of the time today talking about maybe some of the financing and lending options that the new stimulus bill offers to benefit you and keep your employees and keep your employment consistent through this national crisis. So we're going to talk about the small business loan programs, how you would apply, when they apply. And then we're also going to put at the end of this a discussion from businessmen. Both these gentlemen are owning and operating businesses in the area here in North Texas for a long time. So they've got a tremendous amount of experience in business and in enterprise and dealing with different professionals. And so hopefully we're going to be able to add a lot of value in a short video that can help you move forward successfully through this crisis. If at any time there's some question that you have about this, then I encourage you to reach out to Tim and Marty so that they can give you some very critical information. And we're going to give you their contact information at the end of this as well. So let me give a 30-second interview or overview for each of these folks, and then I'm going to push it over to Tim, and then I'm going to ask Marty to fill in any of that detail just so you'll understand what their background is, and then we'll get right into our small business loan program. So the very first individual I'm going to introduce to you is Tim Howell. He's a lawyer here in the North Texas area. He's been operating in business primarily for 15, 20 years. I'll let him describe that, but he's been very helpful in business and in real estate, understands that really well. And he's the one that is really a genius or a very, very smart individual in the small business loan. And just one second, Tim. And then Marty is our CPA. He's our accountant. He's worked in his own business. He's an entrepreneur himself. And he's also a CPA that he's going to be able to really dial you in if you need any type of accounting or any type of business advice when it comes to accounting or how to apply for these loans, how to validate them, how to document them, because that's going to be a big part of this on the back end of that. So that's a short introduction. Tim, you fill in anything I didn't add to that, and then over to Marty, you fill in, and then we'll jump into the small business. Tim, over to you, sir.
Great. Thanks, Lane. I apologize ahead of time if there are any connectivity issues here. We may hit a few snags. I've got two kids in online classes right now sharing the same bandwidth, so it gets a little slow at times. Lane, it's always humbling and nice to be called an expert. Hopefully I can provide some expertise and advice for folks. I am a founding partner of a law firm here in town by the name of Moses, Palmer & Howell. We are a boutique law firm. Traditionally, we've specialized probably in commercial litigation, oil and gas matters. We've had an emphasis and quite a bit of practice with respect to banking, business, contract law, real estate, and construction law. We do quite a bit of general business consulting. We have a probate and estate planning attorney who can handle any types of issues in that arena. And to simplify things in terms of my practice is, I think I would say that I try to help individuals and businesses of any sizes solve problems. And if I'm like most of you, and let me back up. I don't know if I've mentioned I've been practicing law for going on 23 years, and before founding the firm that I'm now a part of, I worked at a large firm here in town for about 9.5 years. Back to where I was is, if like most of us, or many, and I'm assuming all of you, you know, the practice areas I just discussed were the focus of my everyday life for, you know, up until about 2 weeks ago when my world was turned upside down. And since that time, I've dived in and tried to figure out how can I help clients meet the needs they have right now. One of the things I've done is I've really taken a deep dive into some of this legislation. This new CARES Act, which was recently enacted by our federal government, is an 880-page bill. So the information we're going to provide today is going to be obviously at a very high level. There are a lot of aspects of that bill that we will not even touch upon that could impact your business. And we will continue to look at things, and as they arise, see what information we can get out there to help people out. In addition to my own research, one of the resources I've used is Marty, who happens to be not only a friend, but also my personal accountant. He's been a great resource with respect to the ins and outs of how the small business loan aspects of this CARES Act and stimulus package work. So I'll turn it over to Marty now to let him introduce himself and provide an overview of what he can do.
Hey, thanks, Tim. Well, I have a small CPA firm here in town, and what we do is we focus on serving small businesses, business owners and investors, help them with their tax side of the house, doing tax planning, and then also with helping just make their business a lot more profitable than they currently are. And I used to work at PricewaterhouseCoopers and then started up my own deal. Before that, Lane and I, we were talking about, is this as bad or worse than 2008? And I was saying, well, I took a break from public accounting and started my own software business, and I was a casualty of that whole deal. So it's a little different going through it on this side. So we got the experience of being on your side of, of the business owner's side going through a financial crisis like this. So, but we're just focusing on the tax side, the business side for our clients. And then, just like Tim said, our world has turned upside down the last few weeks and become quite knowledgeable about this subject.
Appreciate it, Marty. Appreciate that introduction, Tim. So one thing I want to add real quickly, and I want to just piggyback on what Tim said, was what we're trying to tell you today is current as of 1:45 on Wednesday. If you were to ask me at 2:15, it's very likely that everything I've told you may have changed. And that's just the nature and the pace that this process is going through as the government tries to find the best fit. And so, again, just realize that there's a lot changing, and it's changing very fast. It's changing the marketplace, and the market's trying to adjust to it. So just realize that there's probably some things before you actually got money from these loans or before you made business decisions that may be affected by that. Okay, so what I'd like to do now is I'd like to share my screen with you, and it's a PowerPoint presentation of a couple slides. Tim put this together from his experience and knowledge and discussion, and Marty's going to chime in here where necessary, and we're going to kind of have a back and forth here for just a couple of minutes from a big picture overview of what the small business loan administration could be, maybe some advantages that it could offer you, and how you would go about applying that. So give me 1 second while I share my screen, and as I do that, Tim, I'm going to let you introduce this, anything that I didn't fill out, and I'm going to turn it over to you as I call these slides up. So over to you, Tim.
Great. I'm going to reiterate what Lane said is we have a $1 trillion stimulus package. One of the loan programs we're talking about today, about $250 billion of that stimulus package, just under that amount, is allocated to the payroll protection program loans we'll discuss. This was hastily implemented legislation, and now it was only passed last week, and you know, a week in, we're trying to get banks up and running. So there are going to be issues with implementation and changes as we get into this, which is just a natural consequence of the speed with which these things are moving. So again, like Lane said, what we're telling you now may change, and there's going to be some practical aspects of it. I think big picture will stay pretty much the same. The documentation you have to provide, the loan process of what's required, how some amounts are calculated, that may all change. The only other thing I'll say before we dive into the details is, you know, not only are Marty and I trying to provide this information to all of you and to our clients and friends, but these are things we're looking at doing ourselves as small business owners. We have every intention of trying to apply for one of these loans because this crisis is impacting us as well, and it's impacting our cash flow and our employees, and we want to keep them on board so that when this is over, we're ramped up and ready to go. So Lane, if you go to the next slide, I'll give a quick overview. So there's two types of loans that are currently available or soon to be available. The first is what's called an economic injury disaster loan, or an EIDL. You may see it referred to that way. This is a program that's been in place by the SBA for many years. These are traditionally the types of loans that have been made available in disaster-stricken areas. Take, for example, Hurricane Harvey hit Houston. That area was declared a disaster area. Businesses down there could apply for an EIDL. Right now, the entire nation has been declared an economic disaster area. So the entire nation is eligible, if you're a small business qualified, to apply for these types of loans. The loans are already available and can be applied for directly through the SBA at its website. I've listed the website address on my presentation. The second type of loans are the new ones. These were just enacted by the legislature. They're in the process of being implemented and will be available soon. And I think, as I mentioned earlier, these are called the Paycheck Protection Program loans, or often they're going to be shortened to PPP. And the difference in terms of where you apply or how you apply is that these applications will be processed directly through a local federally insured bank or credit union that is elected to take part in the program, as opposed to applying directly through the SBA. We can go to the next slide. This is just a real basic overview. I'm not going to read the slides to you, but it essentially shows kind of a high-level comparison of the two loans. And we'll get into the details of these things in the slides that come. So if you could go to the next slide, Elaine. First question a lot of people are having for me and for Marty is, who's eligible for these types of loans? And really, it's a pretty broad base. EIDLs are probably a little more restricted. They do apply to all small businesses. I've listed some other types of businesses that are eligible for an EIDL. The real issue there is there's a kind of a two-part test to determine whether a business is small based under SBA guidelines. And the SBA, depending upon the industry you are in, looks at both annual revenue and the number of employees to determine whether you meet the small business threshold. I would imagine most small business owners, or people who consider them small business owners, are going to fall within these categories, but it is a little bit different. With the PPP, it appears to be a broader or wider expanded base of businesses that may qualify. It's really just about any small business concern with less than 500 employees. It doesn't really matter what your structure is. You can be a corporation, a partnership, a limited partnership, an LLC. I've listed some other organizations that are also approved or eligible entities to apply for a PPP, and those include some smaller nonprofits. And kind of a key here for many of you is it also includes self-employed individuals and sole proprietorships. I don't know if we're going to have any tribal business concerns or federal 501c19 organizations. They're also included. There's a couple key points that I would point out when you're looking at this issue of what constitutes less than 500 employees. Employees is a broad definition and includes full-time and part-time employees, as well as independent contractors or 1099 contractors. That'll also be relevant, which I'm going to have Marty explain later, in terms of the calculation of the amount of the loan. And then there's another note, and I'll discuss this on the next page as well, but because the restaurant and hospitality industry has been hit so hard, our government has expanded or exempted some restaurant groups and other businesses in that sector. They would be under what is classified as the NAICS code 72. So restaurants, for example, if you have multiple locations, you may have in the aggregate more than 500 employees, but if you don't have more than 500 employees at a single location, you're still eligible to apply for one of these PPP loans. All right, Lane, we can go to the next slide. In both cases, both EIDLs and PPPs, if you are a company that operates through a network or group of affiliated entities, you need to take a close look. You don't want to fill out an application and state that you have less than 500 employees. If in fact if the SBA or the government were to look at your affiliated entities and determine that you have more than 500 employees through aggregation of those companies, that could create some problems. This is a complex issue. So if you're someone that's operating with a number of affiliated entities and you think that the total employees through those affiliates could exceed the 500 number, you need to consult with your accountant or an attorney or someone who's knowledgeable on these issues. There's two distinctions I see with the EIDLs and PPP eligibility that really turn on the financial aspects. One is that with an EIDL, these are going to be fully underwritten loans that are going to turn on, and approval is going to turn on the applicant's credit rating and its ability to repay, where that really isn't as much of an issue with the PPPs. Those appear to be based just on a good faith certification about how the funds are going to be used, about the necessity or the uncertainty caused by the current economic conditions that are such that the loan would be needed to support ongoing operations. The other thing with an EIDL that's a little different from the PPP is that you do have to make an actual showing there of a substantial economic injury that prevents you from paying your operating expenses. Next slide.
Tim, and we heard almost all that, but you cut out there just as you leaned back a little bit. So I think
Okay.
I think you got everything done. Okay.
Okay.
We can hear you loud. I can hear you loud and clear now. But
Perfect. I'll try to lean forward and try not to press my nose against the screen in doing so. Marty, you want to talk about how the amounts are calculated and what the amounts of these two different loans are? I know that's something you're real familiar with.
Yeah, the on the disaster loans, the EIDLs, that is up to $2 million. And then it is not as restrictive as to what you can use it for. On the PPP loans, you can now you can go up to $10 million on your loan, or you can go 2 times your monthly average payroll cost. And you kind of hit on earlier, the payroll cost, it sounds like a simple calculation. It's a little more complex because it's not only W-2 employees, it's also 1099 contractors. And there's some things you can add in and out, such as things that you can add that you wouldn't normally think are payroll costs, or health insurance that the employer is providing, retirement benefits that the company is providing, and then also the employer state and local tax that they're having to pay. So that's kind of how you come up with those with the amount. There is some discrepancy in how you calculate that on the timing. There is, and the bank's got some guidance yesterday that kind of contradicts what the actual bill says, but in summary, you're going to look at your to get your initial amount, you're going to look at your 2019 payroll tax returns and your 1099s to get your initial loan amount. Now, when you come back to the measurement time, they're going to use a little different time period. It's going to be from February 15th, 2019 to February 15th, 2020.
so Marty, Marty, let me ask a question here, Marty.
Yeah.
When you are advising a client, would you suggest if a businessman was going to take this loan, would they be doing this calculation themselves, or is this something that you would suggest that they consult with a CPA, their accountant, or maybe even yourself? Because it sounds like this is fairly complicated.
I would not do this alone unless you have, I mean, if you have a CFO in-house, you probably do have that CFO. Somebody in the financial realm, or an attorney or somebody, you need to consult on this, because this, you don't want to go in there. Number one, you don't want to ask for too little. And if you ask for too much and then you start spending it and you're like, oh, I got a loan at the end of this deal. So this is an important piece to understand, because what you're going to do is you want to get an accurate number, because as a business person, you're going to come up with your number, and then you're going to say, all right, I'm getting whatever the amount I'm going to get. Now, how am I going to run my business? Because even though they tell you there's specific uses that you need to do with these funds, such as payroll, rent, utilities, and mortgage interest, you still want to know like all business owners, you want to know how much cash you have so you can make some good decisions.
I understand. Good advice.
Lane,
Tim,
can I
you
jump in?
slide?
Yeah, well, no, there are a couple things I wanted to clarify real quick here. One, on the amount, just to be clear, it's capped at 2.5 times average monthly payroll costs, and payroll costs are in parentheses on the slide because they have a specialized meaning, as Marty touched upon, but it can't exceed 10 million. So there are 2 caps there. Most of us are likely going to fall in the whatever 2.5 times the calculation of the payroll costs are. The discrepancy that Marty mentioned is that, and it can make a big difference, and I've received questions about this already. It is, the bill says that the payroll costs or average monthly payroll costs are to be calculated based upon the preceding 12 month or the trailing 12 months leading up to the date that you apply for the loan. Whereas the guidance that came out yesterday that the banks received indicates that it should be based on 2019 calendar year. That can make a big difference depending upon what folks have done over the first 3 months of this year. So I think that's an unresolved issue. I'm gonna, as soon as I'm finished here, I'm gonna turn it over to Marty and let him tell you what he has advised clients to begin gathering in terms of documentation and provide to him so that he can start calculating this, assuming that it may be the calendar year issue. But I would be prepared to address either one, because you may go to your bank and it may very well depend on what your banker asks for, because the banks are learning this too, and none of them are going to have the same program in place. I would imagine you go to 10 banks and get 10 different answers.
Yep.
Last thing I would note is, it's on the slide, but the other kind of confusing or complicating factor is if you have highly compensated employees who were compensated, and again, it's not clear. It doesn't, can't tell if it's their salary or if it's the total payroll cost to you, but there's a $100,000 cap. So for all practical purposes, when you're performing the calculation to determine how much of a loan you're eligible for those highly compensated employees, you cap it at $100,000. Marty, what are you telling folks to provide with respect to documentation and summary form? What do you think the best source is for the payroll costs at this point?
Well, there's two sources that, so we were going by the law, and just kind of tell you how this, and to emphasize Lane's point of how this information is good as of right this moment, and things change rapidly. So we'd gotten all our clients and we'd said, let's go by the law and let's look at payroll reports for February 15th, 2019 to 2020, because that's what the law says. And getting those payroll reports, and then adding in health insurance costs and retirement benefits, subtracting out the folks, the compensation over $100,000. So that's how we were initially. Now the guidance yesterday is saying they're going to use 2019, and then also use, they want to see payroll tax returns. So the thing that we're doing is saying, let's get at least at a bare minimum, we need to get payroll tax returns, the 940s, 941s, and then also get in the W-2s, and also be able to have all the 1099s and the 1096, that is the summary of the 1099 filings, have that available, because that's going to give you the information that the application asks for. It asks for total payroll costs, and it also asks for number of employees. Now, we don't know exactly how that's defined. That sounds like a straightforward answer, but I think the bankers are going to be doing this at such a velocity. I think that's going to be the easiest way for them to approve these loans and going forward and getting them through the system. Because I went to my bank right before this and started talking to them about it, and they were saying, yeah, we're about to send out our packet in from our request list, but each bank, they were very vague in the telling the banks exactly how to do this. So to Tim's point, every bank will be doing this a little bit different. So you need to talk to your banker now, or they probably should be sending you an email either later today or tomorrow, having some sort of document request list to say, start pulling this stuff together.
All right, I think we go to the next slide.
Hey, you know what, Tim, before we start, I wanted to talk one thing about, the timing that we were just, the differences on the timing. One thing Tim was talking about in the law is, and he's exactly right. It says your average payroll for the last 12 months prior to you getting the loan. One of the first questions everybody asks is, hey, I just laid off a bunch of people. Is that going to hurt me? Well, they made a provision. They realized people have been laying people off. So if you put people on unemployment from February 15th, 2020, all the way, and they're on unemployment through April 26, 2020, that is not going to impact the calculation at all. So
as long as you rehire them and put them back at their prior salaries.
Correct. But that temporary layoff is not going to hurt the calculation.
Yeah, the payroll protection program is, like the name suggests, the intent of the government making those loans is to allow businesses to pay some overhead operating expenses and to ensure that employees are kept on and paid at levels or close to what they were paid before. And that kind of is a good segue to this next slide, which, you know, we mentioned earlier, either Marty or I did, that the uses of PPP loans are more restricted than what EIDLs are. And so in general, an EIDL loan, those proceeds can be used to fund any operating expense that the company has and needs to meet. A PPP is limited to payroll costs, group health care benefits, interest on mortgage obligations, and utilities, I believe, rent and utilities. And that becomes important with another aspect of the PPP, which is a loan forgiveness aspect. And I can't remember if we mentioned it, but the other important thing to remember, you may have gathered it from the information that Marty mentioned, but when you're talking about payroll and employees, there's an expanded definition that includes independent contractors. All right, Lane, I think we can go to the next slide unless you have questions.
Oh, hey, you know what, Tim? One thing I've had a question about this before, is that you can use this for when you're using for rent utilities. It's for the rent and utilities for the following 8 weeks that were expenses incurred. So if you're behind on rent or utilities, or you want to prepay rent or utilities or any expenses, that is not allowed during this. So don't try to get creative. It is just trying to keep your doors open. So just look there.
Yeah, the other aspect of just to tie that up too, and I'm switching gears a little bit, but on the loan application that we've seen, the sample, there's a spot that says total number of jobs. That's really vague. And so what I've advised clients to do is to list that number there that you would either pull from your 2019 or your updated payroll records and your, what is it, the form 1096, is that the summary of your 1099?
Yeah, that 1096 is your 1099 summary.
I've said to list full-time, part-time, and independent contractors, but then because there's some confusion, I'd prepare a supplemental list that breaks down who falls into what categories. Turning to this next slide, this is just a general overview of the terms offered of these loans. You can see the interest rates, repayment terms. The kind of key comparison here is the PPPs are non-recourse, no personal guarantee, no collateral, whereas the EIDLs are going to require both, and they're going to be fully underwritten. I have a note in red. There is some uncertainty. This is one of those things that arose yesterday. The original terms on the PPP said 4% interest, 6 to 12 months of deferred payments, and then up to a 10-year repayment plan subject to loan forgiveness. Whereas those terms were different on the sheet that came out yesterday. It indicated a 0.5 point interest rate in a 2-year term. So we're just going to see how that shakes out. We can go to the next slide. Yeah, these are the special features. Marty, you want to touch on these?
Oh yeah, so on the a lot of people say, do I need to do the get this $10,000 grant on these disaster loans, the EIDLs, and that is a good, if you have some other business issues that are going on that the PPP will not, and you need cash now, that might be a thing to do, is to go and they will give you $10,000 advance grant no matter if you're approved or not on these disaster loans. Supposedly you get it within, I believe, 72 hours. The problem with that is I know the website I think it was shut down over the weekend, and they've been having issues since now the entire country is a disaster area. I think the web infrastructure just isn't handling all the requests. You have to go to an SBA lender to get that. So if you are able to get through and apply, you get the $10,000 and you apply for the PPP, which you can do both. But when you have this loan forgiveness feature in the PPP, they're going to count that $10,000 advance that you got in the disaster loan. And what you do, and to get this loan forgiveness, so let's for example, let's say your monthly you figure out your monthly payroll is $200,000. So therefore, you're going to get a $500,000 PPP loan. And so at the end of the 8 weeks, you spend instead of $500,000, you only spend $480,000 of it. So you're going to get loan forgiveness of $480,000, and then now you're going to get to $20,000 that's now going to be a part of a loan. But what you're going to have to end up documenting that you paid $480,000 for payroll. You're going to have to show the rent. You're going to have to show the group health care costs. You're going to mortgage interest, the utilities, and then show that those expenses were for the 8-week period and not expenses before or after the 8-week period. And then once you turn that in, the PPP side, the bank, you turn that information into the bank, and then within 60 days after you turn it into the bank, they will give you the answer of how much they're going to forgive.
Yeah, the one note that I added on the slide is that, again, the loan forgiveness only applies to the extent the loan proceeds are used in that 8-week period after the loan is issued for the permissible purposes. And because it is intended to ensure that employers keep employees, both in terms of number of employees and in compensation to those employees on the payroll, the forgiven amount is reduced proportionately if you lay off or terminate employees during that time frame, or if you reduce their salaries by more than 25%. How that's going to work, someone's going to have to figure that out, 3 or 4 months from now.
Yeah.
We can go to the next slide. I think we've probably covered most of these points. The EIDLs you apply directly through the SBA website, but there appears to be a backlog. The PPPs you'll apply through your bank. I've given a link to where you can find a sample application. So if you want to start looking at that and filling it out, can't guarantee you that it won't change between now and then, but it'll at least give you an idea and of what information you need so you're prepared, and it wouldn't hurt to fill one out and have it ready to go as soon as the banks start accepting them. The guidance we received yesterday says that for small businesses and sole proprietorships, that you are supposed to be able to start submitting these applications this Friday, April 3rd. I'll be really surprised if most banks are set up by that time, but you should reach out to your bank or credit union and see what their time frame is. We can go to the next slide. We spent a lot of time talking about the loans. I mentioned when we started, there's a lot of other features of this CARES Stimulus Act that was recently enacted. Marty, why don't you touch upon a few of these things? I think you mentioned them when we spoke to Wayne earlier.
Yeah, there's a provision that you can now do some withdrawals out of your 401k and your other retirement accounts of up to $100,000. You get them repaid within 3 years. There's no taxes. If you don't repay them, you can pay the tax over 3 years, and that's limited to $100,000 that you can take out of your qualified plan. You got some deferrals of some student loans payments. There are definitely some payroll tax credit and payroll tax issues that I really haven't had a chance to look at in depth, but I do know there's some deferment of payroll taxes that you're allowed through this whole time. Payroll taxes that you should have already collected but haven't remitted, and they're just giving you to trying to help cash flow. But I will say, I would not take advantage of paying your payroll taxes late, because if that money stays in your bank account, it has a tendency to find another home, and then you're going to have payroll tax issues. So I would, and this whole PPP should take care of your other issues, your cash flow issues, or the disaster loan will take care of your any business issues that you have. Just don't rob from your tax account during this whole process.
Yeah, I'm not an employment law lawyer, but there are also some pretty important changes that were made with respect to sick leave and family medical leave with respect to individuals who are sick with or caring for individuals who are sick with the COVID-19 virus, as well as individuals who are unable to work remotely or at the office because they have children who are at home and they're having to care for them and school is out. Those are things that if you have any employees in those situations, you should consult with an labor employment law attorney to get specific answers to your questions. The reason that I thought that these 401k changes or retirement plan changes are significant is that to the extent we have employees who are suffering, I know we have employees at my firm who have taken out loans on their 401k and have automatically deducted payments of $400 something a month, for instance. And for people like that, if we can defer those payments, and if this legislation allows those payments to be deferred for a year, that could really free up some cash for people who are, in many instances living month to month, paycheck to paycheck.
Yeah.
And Marty, I had another question for you concerning these other features of the CARE Act. Because a lot of our investors that I'm going to be in my network are passive or syndicators. And so I know that there was a depreciation change or correction that got put into this. Is that correct?
Yes.
And can you explain how that may benefit real estate specific topics?
Yeah, so back in the 2017 tax reform, there were some depreciation rules that were changed, and then it allowed anything with a tax life of 20 years or less, you could depreciate all in the first year, like the old Section 179 that most people are familiar with. Well, there was an issue to where then anything that was a commercial real estate did not fit into that. Those new rules, now they did a technical correction on the depreciation rules to where that will allow you to do 100% depreciation on the commercial real estate and you can go back and it's retroactive. So it's going to allow you to go back and amend 2017 and 18 tax returns to accelerate some depreciation. We don't know exactly all the processes to do that, the mechanisms. So, but that is a nice little nugget that they put in here. So,
and Lane, that raised a point. From a real estate perspective, if you're simply a passive investment entity, like many people may be who invest in a commercial real estate project, you're probably not going to be able to take advantage of these loans. But it would be applicable to property management companies, to construction contractors, and to all kinds of other services that are part of the real estate industry.
Yeah, Tim, and I appreciate that point. So that's important because a lot of our real estate investors are, if you will, part-time investors, and they may have a small business loan that, even though their real estate holdings don't qualify them to take advantage of, more than likely they're either employed by a small business owner and they can forward this advice to them, or they may be small business owners themselves. But from my understanding and talking to you beforehand, there's probably a limited amount of application for these small business loans to true real estate investors. But thank you. That's great advice too.
The only other practical application I would have is if you're in commercial real estate, most of your tenants are likely small businesses, and those small businesses are going to be struggling. And so make them aware of these loans. It might help you get paid rent for a couple extra months.
Absolutely.
Yep.
All right, we can go to the next slide, which is something that, Lane, you asked me to address, which is just practical advice for real estate investors and some changes in the legal landscape that have been taking place because of this financial crisis. And, my advice to landlords, property owners, is that now is the time to collaborate. This cannot be business as usual. Our normal, having represented landlords, being one myself through investments, your natural reaction when someone doesn't pay rent or can't pay rent is to move forward with your options or your remedies under the lease, to tee it up for a foreclosure or an eviction. Well, foreclosure would be in a mortgage setting. An eviction would be in the rent setting. And I just don't think that now is the time for that. I think that would be extremely short-sighted. You know, let's consider changing our mentality. Tenants, whether they're commercial or residential, they're simply going to have serious cash flow issues for the foreseeable future. We think it's going to be short-term, but this could drag on for 3, 4, 5 months. There's just no doubt. And there's talk of unemployment rates being in excess of 30%. So from a practical standpoint, if you could evict someone, it's not going to do you any good, because there's not going to be anyone else out there that has a job that's able to come fill that spot. I think the better reasoned course is to work with your tenants, both commercial and residential. Some people will try to take advantage of it, but I think most of them won't. I think you're going to build some goodwill, and I think you can get creative and work with these people, because what we all want is to come out on the other side of this and have tenants in place who can pay. If nothing else, you're going to build some goodwill with those people. There's creative approaches you can take. I mean, I know we've done this, we've advised clients to do this, but as a landlord, for instance, you can offer your tenants either rent abatements or rent concessions, just like you do with a TI allowance or when you enter into a new lease, and have them make that up either on the back end by extending amending the lease and extending it for a couple months, or you could give them, you know, say, we'll cut your rent in half for the next 3 months, and then you make it up in the 3 months after that by paying 1.5 times. There's ways to get creative to try to work together through this situation. And if you're the landlord and you're having to make those rent concessions, because if you don't make them, they're probably just going to happen anyway because people aren't going to be able to pay, you can simultaneously be working both sides. There's no reason why, because we all anticipate cash flow issues, you shouldn't be reaching out to your lenders now. And, you know, if you're lucky enough to own your property outright, then you're in a good situation. But if you have a property with a mortgage, you should be contacting your mortgage company and asking for concessions and looking for ways to try to ease the pain from your side as well, because every industry is going to have it. And the banks don't want to be in a situation 6 months from now where every loan they have on a commercial property is in default. And if they don't work with us, that's probably what's going to happen. So I think the banks are going to be more willing than they would under normal circumstances to work with their customers. And I think that as a landlord, you've got to be more than willing to work with your folks, which goes against everything you've done to this point, but it may serve you well in the long run. The other thing I was going to point out is, even if you wanted to evict people, you may not be able to, because there are many Texas counties. I haven't researched all of them. I know for a fact that Bayer County has done this. I can't remember what Dallas and Tarrant have done, but there's probably, if it hasn't happened here, there's talk of it, I'm sure. But many counties have basically put moratoriums on eviction lawsuits. They've said you can't, whether it's already been filed or whether it's a new filing, they're putting all those on hold for a matter of months as part of the relief to try to help people affected by this. Doesn't help you as a landlord, especially if you've got someone who's been delinquent for months, but they're just painting a broad brush. And then I'm not super familiar with it, but I know that under the CARES Act, there are some provisions for tolling and prevention of foreclosure and or eviction. I don't remember exactly, but that involves any of your federally backed loans. So there are some protections there as well.
And let me ask you another question. You may not know the answer to this, but let's say that we get a tenant and the tenant contracts the coronavirus. Is there anything legally that we would have to notify other tenants about, or how would we deal with that, or what would you suggest if one of the tenants actually passed away because of the coronavirus?
I don't know the answer. Legally, I'm not aware of any obligations. That, again, may be something addressed by all this legislation and all these local orders that are flying around. I mean, my personal belief is that best practices and the right thing to do would be to notify your tenants, because at the end of the day, they need to be made aware of possible exposure. They need to look out for their own safety and well-being. But I don't know the exact answer. I think it would depend on circumstances. Where did that person live within the complex? How much exposure did they have to others? But it sure seems to me that in today's world, the prudent thing to do would be to provide some notice. I will tell you, for instance, our landlord at our building downtown has sent us instructions, and you might look at the CDC website for guidance. It may be there, but we have been told that we are to notify our landlord if anyone within our office has contracted COVID-19, and it may even extend to family members of people at the office, because we're obviously sharing common areas with other tenants, and they have asked us to keep them apprised. So the CDC guidelines, you can go on the CDC website. It may provide some guidance there.
Thank you.
All right, these are just lawyer and accountant disclaimers. We've hit this at high level. This is just for your informational purposes. And, if you have specific questions relating to your business, then feel free to contact us or your own attorney, or, talk to your banker. We, reach out and speak to professionals for help if you have questions about these things. And as we said, it's changing. This is my contact information. I provided my cell. That's my new office number. Feel free to call me there or email me at my email address as provided. And the next slide should have Marty's information. Marty, is that your office or your cell number?
That's my office number.
You're able to, and here's the last one. Everyone needs a laugh. I get told all the time by random people that I look like Bill Murray, and this is hanging on the wall of my office at my real office. And my son actually approached Bill Murray at the Colonial Pro-Am with these pictures that they had made, one of me and one of him, and told him that people said his dad looked like him. And Murray stopped and laughed and asked him my name, and you'll see there that he autographed my picture with his name and autographed my name on his picture. So we all need a laugh today.
Mm-hmm. Yeah. Well, good. Well, Marty, is there any other comments that you would want to add about either the small business loan or the business practices that you haven't already? Anything to add?
I would think we have a lot of clients saying, all right, what's the catch? Why do we have this program? Why is the government doing the program? And the whole idea is they're trying to get people paychecks. They want them to get paid and the economy not to stop. So they had three options, and one of the options is new that they've never done before. The first option was they could have given everybody a $30,000 stimulus check. They're giving stimulus checks, but they're not $30,000. That would have covered everybody for 3 months plus. The other thing they could have done is they could have said, all right, everybody get unemployment. Well, they did a little bit of that. They gave everybody, you get $600 extra a week on top of what the state does. So that is available. But this new deal with the PPP is something new that they've never done before. And what they wanted to do is they realized that the bureaucracy of going through unemployment, and then the fact that if you give everybody checks, the money's not going to turn in the economy like it will through a business. So they basically put a lot of administrative burden and the speed, and they said, all right, we're going to let the local banks, we're going to deputize the local banks to be able to do SBA loans, even though they've never done them before. We're going to let small businesses go to their banks, get this money. And if they use it like we were going to use it, the federal government was just going to pay salaries with it. And they were getting no return, zero return at all would they have gotten on that money. So they decided to go through the businesses, let the business owners decide how to use the money. And if you use the money in the way that they're asking you to, then it's a grant, just like it would have been if it had been unemployment or they give you stimulus. The other thing they did is they realized that, okay, it's 2.5 times payroll. You got to pay your people. If you pay your people, they got to go have a place to go to work. So they're giving you money for rent or your mortgage interest, and they're giving you money for utilities. The other thing that did is that should keep the commercial real estate market from imploding. Then that keeps the banks from going south, and now it keeps the federal government having to bail out the banks again. So it was a pretty smart move on their part to do this. And that's what I would do. As you do this calculation, You say, hey, I got a couple $100,000. What can I do in my business? Just keep it. Don't get greedy. Keep in mind, this is just to keep people on payroll, no matter if they're doing anything or not. And a lot of people are going to be paying folks when they're on and there's nothing to do. So just use this time to get better as a business. Just find out what's bad with your business and just deputize everybody in there in the business. Say, hey, we're not busy. Now let's fix it. The other thing I'm telling folks from a practical standpoint, if your business is shut down right now, like the restaurants, like the dentist office, or if you're a gym or something like that. Yeah, I touched on it before. Unemployment benefits don't hurt you in the calculation until April 26th. That's 30 days after this CARES Act was enacted and signed. So if you want to allow the federal government to pay your employees for 12 weeks instead of the prescribed 8, put them on unemployment for basically the entire month of April. Then you want to have your PPP loan originate on April the 26th. Then you have 8 weeks that you can put the people on payroll, and the government's going to reimburse you. So that's going to get you all the way to June 30th. Well, and that'll get your employees to where they're going to get a paycheck till June 30th. And that is the best way, if your business is shut down for the next 30 days, to really stretch this program out and be the most beneficial for your employees. Your employees aren't going to like it at first because you're saying, go hit the unemployment line. But at the end of the day, if you explain it to them that, hey, I'm ensuring you're getting a paycheck for 12 weeks versus just 8, I think it'll be a good thing. They'll understand eventually, and then it'll help you get back on your feet quicker.
Marty, I want to say thank you so much for sharing your expert knowledge. Tim, I want to say thank you for putting this slideshow presentation together. I believe the information that you guys provided is going to be a tremendous benefit to my group and hopefully other people who hear this. And I ask that you send it out to people that need it, because information is out there. There's resources through the federal and state government that if you don't know about and you don't apply for them, then you're not going to be advantaged to take those. So I want to say thank you guys for doing that. I think it was a tremendous value add. And for the investor groups or other people that may be listening to this is really unprecedented times. And, we've never really experienced something like this, a complete government shutdown of business mandated. And I don't really know, what to do, but we're trying to show leadership. We're trying to get this information out to you so that we can be in a position to act and really suffer through this together as a country, as businessmen and women, and then pool together so that we come out, like we mentioned, with the very best business opportunities, the very best investments, and the very best processes going forward. So I want to say thank you one more time, guys. And they've got your contact information. I hope that if you have any specific questions about these points, that you reach out to your professionals. And if they're not available, I can guarantee that these guys will be available and ready to give you some expert advice. I appreciate you listening today. And as always, I encourage you to think like a millionaire, act like a millionaire, and be a millionaire. Have a great day.